Good afternoon. How are we? Not that cold, right, anymore? So that's good. Well, guys, if you have people who are trying to raise money, if you have friends who are startup, and it's time to tell them because this is happening here. This is here. Okay, we are going to talk about VC and about well, how to invest and where is the next unicorn. I hope you didn't have too much rum during your lunch, that you feel warm and cozy, right? And I will introduce my dear panelists before we start talking about money. And first, I would like to welcome Victoria Umanska. Victoria is investor manager in SMOK, and she will tell us a little bit more in a few minutes. Cesar Salazar, founder and CEO of Beyond, but he's from Mexico and is well known in building huge, nice, cool ecosystem. And he's also, but he won't tell you that, but he's also passionate about raccoon, right? You love raccoons. Yes, I knew it. Then we have Can Saracoglu, who is a founding partner at seedstars URU Capital. How do you pronounce it? URU Capital, of course. And Pavel Bogdanov, who is the general partner of Almaz Capital. Okay, please join, guys. Join. I'm sure you guys you want to raise money to create a startup, right? Yes, of course. Well, have a seat. Welcome. Few things. I was looking at numbers to prepare these panels because I thought, you know, COVID, maybe VC was not a thing for 18 months. Maybe Silicon Valley stopped. Maybe there's no new unicorn. And in fact, it's exactly the reverse. I have the feeling that the world of VC is going crazy. A few numbers, according to CB Insight. By the way, if you're interested, there's a very interesting report from CB Insight called CB Insight Venture Report Q2 2021. Google it. It's nice. Do you know how many unicorns there were in Q2 2020? How many unicorns in Q2 2020 in the world? 20. More, less? 21. 23. There were 23 unicorns in Q2 2020. In Q2 2021, how many unicorns? Huh? 50? 136. It's an increase of 491%. I mean, guys, what's going on? What's going on? I mean, there's a nest of unicorns somewhere wearing diapers and being ready to fly. I don't know. Global startup financing in Q2 21, sorry. It's 156 billion. It's an increase of 157% compared to Q2 20. So there is money. It's invested. It's invested in startup. There is more money than we ever thought there was. The valuation is going up. So actually, is the world getting crazy right now in terms of VC, in terms of valuation? This is what we're going to try to discover with our panelists. And I think a lot of you actually, and we will start with that, don't exactly know what is a VC and what a VC does. And actually, I think we should start with that. So I'm going to ask each of our panelists to introduce their fund and explain a little bit what is their job. What is it that you do to invest in a startup? Starting with Victoria, please. The floor is yours.
Oh, thank you very much. Good afternoon, everybody, and my name is Victoria. I had a little bit of promotion since I was actually introduced over here.
Ooh.
So now I'm not investment manager, I'm just like, it's shorter, just investor.
There you go. Congratulations.
Thank you very much. I'm over here representing SMOK Ventures. We are the venture capital from Poland, a part of Bregel Brothers Syndicate. state, represented in 4 different continents, with more than 11 unicorns in the portfolio throughout. So maybe you know such startups as Uber, Stripe, or Pokemon Go. Those are the ones in which our managing partners have invested. So right now we're introducing the Polish chapter, and our next fund will be dedicated to Ukrainian founders as well. Investing on seed, pre-seed, and that's what we do. We're finding smart founders, incredible talents, and investing on the pre-MVP stage. So literally just your pitch deck, your wonderful abilities to perform and show that there is a market for new innovations which have not been discovered. That's us.
Cool, I love this. Okay, URU Capital. Tell us, what's your job, what are you doing, where are you based, and what are you looking for?
URU Capital is a new fund to be launched towards the end of the year, going to be $70 million size, and our regional focus will be Central and Eastern Europe and Central Asia, starting from Poland to covering a large area till Kazakhstan. Me and my partners are based in Istanbul. Turkey is, of course, within our scope as well. And we'll be looking for, because it's a special partnership with SeedStars. They're doing the pre-seed and seed stage investments, and we are like a regional extension of their efforts. But we also invest other startups outside SeedStars' own network as well, as long as they're within our regional focus. And we kind of help startups to find product market fit and the transition from a startup to scale-up process. And as 3 general partners, each of us has particular experience in each area. Myself, I'm more on the early stage side and helping a great deal in terms of product definition, customer journey, and finding the roadmap to the product market fit in a sense. And my last partner is more on the exit and will take the startups to Series B and onwards.
And you guys both invest in Ukraine already? Do you already have investment in Ukraine? Do you plan?
We already had previous investments. I mean, I had the seed stage fund called String Ventures beforehand. And yeah, one of my portfolio companies is from Ukraine. It's Spin AI. It's a cybersecurity startup. And they're doing quite well at the moment. Cybersecurity is one of the verticals that positively affected by the pandemic because a lot of workers had to work remotely and they got affected. The corporations looking for a lot of cybersecurity solutions on the cloud, and that was what they were particularly doing at. Yeah, we have.
Cool. Victoria?
It's been only 6 months since I've joined SMOK Ventures, so unfortunately we don't have a closed deals yet, but yes, we're highly considering Ukrainian founders, as well as the part of the next fund. So next year will be dedicated for the Ukrainian founders only. However, I've been working before for B Value Ventures. We became the most active foreign investor in Ukraine, so we did also invest in Spin AI. Also, the great founders, the other great founders, including Coldplay, guys. So yeah,
cool.
We are here.
You're here. Cool. I love it. Pavel Bogdanov, general partner of Almaz Capital. Well, Almaz, well known.
Yep. So
tell us everything.
You wanted a more basic introduction to VC, so maybe I'll do that, right? So we're an early stage investor. What an investor is, we become a partner in the firm. And if you are founders, you probably have partners. Sometimes, you're a business founder, you need somebody to develop a product. You approach somebody and ask, can you help develop product? Let's build a company together. You'll have, I don't know, 50%, 40%, I'll have the rest, let's do it. And that's your partner. He has or she has part of the company and contributes his sweat, his work for the ownership, right? For shares. We contribute primarily money. So we also become partners. Normally, for the fund like ours, we get ownership between 10 and 40%. And we become one of the shareholders. Instead of working every day, we contribute money. For us, it's between 1 and 10 million up to maybe $25 million. And we are together to build a large company with you. We can help you as well, but we are not full-time employees. So specifically about Almaz, as I said, it's an early stage fund. We invest in companies that have a product but are quite small. So usually we would not invest if you're over $10 million a year in your revenue run rate. We are globally placed, headquartered in Silicon Valley. One partner is on the East Coast of the US, one partner in London. I'm based in Berlin with 3 more colleagues. And we have people further east in Warsaw, in Prague, in Kiev, and in Moscow.
Cool, thank you. Cesar, you're coming from Mexico, and so all the way to Kiev, so thank you very much. And well, tell us a little bit about you, your fund, and your vision, and yeah.
I can tell you a bit about my story because I think that would be more relevant to the audience. I did come from Mexico City to this. I'm very happy to see how much is happening here in Kiev. And I started in venture capital because I was a founder who couldn't find venture in my country 10 years ago. So like my friends and I decided to start a venture fund to basically fund our friends. And that was a stupid idea.
I love
because running a venture fund is really hard, and raising money for a venture fund is even harder than raising money for a startup, but we didn't know that. So we made a stupid decision, and that stupid decision a year later resulted in us running out of money. And because we ran out of money, we had to start looking for options to stay alive. And that option led to the most wonderful experience in my life, which was getting acquired by 500 startups. At that point, 500 startups was starting, so I joined as the 6th member of the investment team. And at that point, the name 500 startups was still very ridiculous. People were like, what, 500 startups, that's a lot. And we made it less ridiculous because we kept investing in startups until we were investing in more than 500 of them. So at the time I left, we were investing in over 50 countries. We had invested in around 1,500 companies. I had personally been involved in making around 100 of those investment decisions across Latin America. And we're investing in around 1.5 companies per day. So that was a lot, and I was incredibly burned out, and I left investing, and now I'm a founder, which is counterintuitive because most people start as founders and then eventually become venture investors. And so I hopefully get some opportunity to tell like how is it to invest in so many startups and what we're looking for and how, I mean, you can leverage some of that.
Cool, and we'll come back to this. I just mentioned a few numbers. They seem crazy. I mean, when I did that research, I was really not expecting to see actually the number of unicorns booming during the pandemic, the value, the money invested. I mean, and most of this money, I mean, 70 billion out of the 150 billion invested are invested in the US. So the US, and we will come back to this, seems still to be the mecca, but obviously there's also money for other regions. Is it something you see? Like, do you feel like there's more money, more projects, more... Victoria?
Well, for us, the pace didn't stop. Like we are constantly investing at least one startup per month. So that's our like the goal, the initial goal. Amount of the startups which we were reviewing, it's constantly increasing because we are doing a great job. You know, that's as simple as that. So I think the quality of the startups, that's the different version. We are currently investing in Poland in serial founders, not only, but it just happened to be that majority of well-known startuppers are coming back to us. So our due diligence is a bit shorter, and that's.
It's getting more competitive, right?
In Poland, for sure.
In the region, yes.
In the region, for sure. I'm currently. I'll be also traveling to Prague and Lithuania, Latvia, just to double check with the guys how the things are going. So if you will be around, feel free to join and jump on my road trip.
Cool.
But looking at the numbers, the whole region is scaling faster. However, I believe SoftBank and Speed Ventures have just started a new initiative for emerging Europe and described emerging Europe as Germany. So I'm not sure, gentlemen, what kind of emerging Europe we're talking about, but I'm over here concentrating on Central and Eastern. So, and I think it's doing great.
Can.
Yeah, I mean, significant amount of money is being channeling into tech space. One of the reasons is the pandemic, because it accelerated the transition to a more digitized economy, and it's proved to be a safer bet than most other investment verticals, I would say. And pandemic also drove some consumer behavioral change in that regard as well. Like we have seen the rise of new kinds of startups, like various on-demand delivery services, like for groceries, for foods, and the invention of new categories like dark stores, dark kitchens, that kind of stuff. And yeah, it attracts a lot of investor interest. Europe is actually booming in that regard. I mean, as far as I know, they created something like 70 unicorns and exceeded China. I think one of the reasons why money is pouring into Europe is also money wants to get into tech, and they allocated a bit of that into China. But now they are fearful of the changes in China as well, like the crackdown on tech sector and the nationalization of e-learning startups or Bitcoin farming crackdown, that kind of stuff. So yeah, I mean, our region is attracting significant amount of capital at the moment. And that's actually transitioning into valuations. That's why valuations on average are at early stage 27% higher compared to the last year.
Okay, let me get that right. Early stage valuation, 20% higher than last year in the region.
In general, in the world, all valuations in all stages are plus 20% more. And in early stage, it's the highest at 27% more.
Okay, guys, after this panel, we all start a startup, right? I think it's a right moment. So if you have an idea, I mean, a good one, please, and don't pitch crap. But yeah, yes, Victoria.
I just really wanted to add, because we are talking right now about those macro things, like big things, general money movement, but it doesn't mean that you look at the your investor and check, okay, so my valuation before COVID was this, so we add plus 20, I think that will be a very weak point for the negotiations. Just don't do this.
So you're telling us you're not all completely stupid, right?
No, I think, generally the quality of the startups has been changed and it has been improved practically because the biggest and the smartest people have been tired of sitting at the corporations. And we are exploring right now this trend of booming and switching the jobs. And guys, please, yes, do this.
So it's interesting because it's something we see, of course, at UNIT.City. We have a place called Nest where we have a competition to welcome startup for free, and we created a boot camp with our dear friend Rick Rasmussen from UC Berkeley to train them for 3 months. And I've seen honestly the quality, the number, and the quality of the startup coming to Nest. It's really cool to see. Cesar, is it something you see also in your part of the world?
Everywhere. I think in my part of the world more than anywhere. Latin America has been breaking all of the records, like in terms of valuations, number of unicorns, number of venture rounds. Like right now, a lot of people are looking into that market. And to me, I mean, if you ask me what is happening, I think we're seeing the perfect storm. It's the pandemic and acceleration of digital like enablement for everyone. It's also that now founders don't have to travel to pitch. It actually introduced a lot of friction. People had to go to the major hubs and pitch in person. Now they can pitch from home. So that increases the number of meetings that they can have. That increases the number of startups that a venture fund can be evaluating all the time. We're also, and it's historically, money has never been cheaper than now. For those who are less familiar with how the macroeconomics of money work, basically those interest rates, when you see that they're lower, that means that money is more available and cheaper. So that money wants to flow somewhere, and it starts looking for opportunity everywhere. And then people start competing for that opportunity, which means that more people are looking into venture as a way to create like better outcomes. And I think the last one that what we're seeing is that finally, because of the pandemic, Silicon Valley investors started looking into the rest of the world. And they came up with the big realization that the world is not so different to what they were originally used to. So that meant that Silicon Valley investors started going into other places and investing directly in companies that they wouldn't have invested before, because originally they would have asked companies to move to Silicon Valley to invest, and now they're investing everywhere. So that means that there is higher appetite for that, and the local investors are looking at that as validation for their markets, and then they're saying, oh, I want to be in that company too. So it's like now everybody is competing with everybody. And there's no better moment to be a founder, really. I mean, if you look at it from that perspective, at least, there's never a better moment than now, which doesn't mean that it's going to be easy, just to clarify. You will still face a lot of competition. Most companies will still fail. It will take a lot of effort to go and raise, but it's definitely not as hard as it used to be in many of these places.
I'm sure Pavel is going to want to challenge this in 1 second because you're very hands-on, so the idea maybe of investing really far might not be exactly your forte, but we had a good example of what you just described, Cesar, in Ukraine, actually. Reface. I'm sure most of you have heard about the story about Reface, which is an amazing Ukrainian startup, raised I think more than $5 million from Andreessen Horowitz, which is one of the best VC in the world, not even going to Silicon Valley. And Andreessen Horowitz is very well known not to invest outside of 10 miles from their office because they want to see the founder. And I think it's one of the first time that they invested without meeting the founders. But Pavel, you're more hands-on in your approach, right? So what is your take on this?
So one topic touched was the growth of valuations, and my take is that it's macro-driven. People who have money are panicking. They want to save the money. The value of money has been decreasing. Yes, consumer price inflation, food, etc., is more or less stable. And yes, the banks in Europe will charge you money, negative interest rates for keeping the money, but all assets have been appreciating like crazy, starting with equities and real estate and everything. And if you want to save money long term, how do you save it? That's a lot of people look for safety in future economy. They want to have exposure for something that will be big in the future. And if you look for something that's big today, it's a $1 trillion valuation companies. It's okay to invest $1 billion. It's something that can be a $1 trillion company in the future. So people looking for safety, they're trying to get some sort of hedge against the wave of value destruction that the printing of money could bring. Not necessarily will, but some people are afraid will. So that's what's happening. Indeed, a great time to fundraise. Money is more available. People are investing more eagerly, investing at different stages. Another characteristic of the moment that a lot of startups that get funded are expensive to operate. So there's a material value if you invest $500 million. It will help the company significantly grow. If we talk about some old tech software development startups, you don't really know what to do with $500 million. You have enough engineers, you have whatever, 200 engineers, they do the product. You cannot really accelerate much by hiring 100 times more. But if it's food delivery, if it's car sharing, stuff like that, that's clearly there's value to attracting more capital.
Okay, so we had a lot of good news. Money is available, valuation is going up, it's easier to pitch. Now let's talk a little bit more about the region. Actually, about the region and about Ukraine, more specifically. It seems still that there is not a lot of VC yet doing a lot of business in Ukraine. We feel, actually, I see it from my perspective in UNIT.City, that it's still hard for a startup to have access to VC. There's players, and you have maybe one deal, two deals. But what do we need to do to change that? What's missing? Why don't you guys see the opportunity that we see? Are we doing something wrong? Should we do something differently?
I hate this question.
Huh?
I hate this question.
Of course.
You know why?
Why?
Because since I came to Ukraine, there are more questions of what you guys are doing wrong, but not the question that you guys just don't have enough of the capital. We in Poland, right? I am as much Ukrainian as I am Polish, but in Poland, currently, there is registered around 115 venture capitals with the amount of the people in the country equivalent of 33 million. In Latvia, Lithuania, and Estonia combined, there are less citizens than by the unofficial data in Kiev only. And then I think you can count, 6 venture capitals which are operating in Ukraine with average ticket of 200K, maybe 250. And the guys are doing a great job. TA Ventures, SMRK, the Q partners, right?
QPD.
The guys are doing an amazing job. I love them. But
Me too.
Is that enough? No, it's not. That's why we are here. That's why we are trying, to find the startups, talk to them, to fundraise. And I believe me and my colleagues are seeing as huge potential business-wise and generally, in the development-wise. It's not the question of how good are people. People are good enough, smart enough, driven enough, ambitious enough. Let's give them money and see what happens and take this risk for the next 10 years. And that's why I'm personally sitting over here. What about you?
If I can give another point of view on this debate, in the US, you don't hear in Montana people saying, how come we don't have any startups and VCs in Montana? And you don't hear that in Alaska. And in other states where you have no VCs and no startups, people are not lamenting that. That's fine. They're happy because they benefit still being in the US, benefiting from the changes that startups bring to the economy. And startups appear where there's a demand for innovation. And Silicon Valley continues being the most attractive place for startups because that's where you can most easily sell a product. It's highly competitive. Europe is much less competitive than US. So to stay competitive, clients in the US sometimes buy new technology without spending too much on diligence and everything. And if you are developing new technology, the easiest for you, if it's really new, the easiest market would be the US. So saying let's build startups purely in Ukraine, I think is folly. You should build startups for clients where the clients are mostly in the US. And if you are from Ukraine, or if you have connection in Ukraine, you have technology partners in Ukraine, people who do development, we think that's a winning combination. You get great talent, way cheaper than in Silicon Valley. You get very loyal people. You can build a very successful story. Usually, it depends on who counts. Some people will say it's not really a Ukrainian startup, it's a US startup. But for us as a fund, we consider it a Ukrainian startup because usually most of the people will be employed in Ukraine. People will get rich. They will go and start new businesses after that. And that's basically the value we bring to the local community, and that's what we support.
I'm going to give two cases from Turkey, so it might be a little bit of a benchmark. Like Udemy, for instance, the founder is Turkish, and he actually tried to do the same e-learning platform in Turkey, and it failed. It was like a decade ago, and then he moved to US, replicated the same stuff, and it's Udemy now. It's a $30 billion company or something like that. But a more recent example is Getir. It's the inventor of the dark store category, actually, in the world. It's an on-demand grocery and food delivery service. Now they're $7.5 billion worth company, and they started in Turkey, and they grew to a significant extent in Turkey, and then moved to UK and the Netherlands, and now they're going to move in the US. So that's also a factor. Like if you look at the successful Ukrainian startups, like let's say GitLab, Grammarly, you know, their track is not really that visible in Ukraine as if they appeared in the US, like the Udemy case that we had in Turkey. But I think it will change because now the, you know, your home country as a test market is kind of becoming good enough for worldwide investors as well. And also a good enough market for consumption as well to start with. So I think we will see a lot of that. But also a secondary issue is jurisdiction. Like one of the major reasons why, you know, startups eventually end up as Delaware C Corps, because Delaware courts know startup and VC deals and have seen so many court cases. So investors like Andreessen Horowitz only trust the jurisdiction of that region. I mean, even if, you know, Facebook was set up as a Florida limited liability company, to get the money of VCs, they had to transfer the company into a Delaware C Corp. And jurisdiction is also another issue.
I can also chip in. I don't know anything about the Ukrainian ecosystem, so I will not even get there. I can tell you what happened in Mexico and Latam. Because 10 years ago when I started this fund, we started it because there was nobody doing it. And we were investing like $30,000 in companies. So that gives you like an idea of how like there was nobody investing. And just now, like I think in the last quarter, like Mexican companies raised close to $1 billion only in the last quarter. So it takes a lot of time. Like it took us 10 years to go from us investing like a few thousand here and there to now a lot of these venture funds looking at like this larger rounds. And now there's a typical Series A of a Mexican startup is now over $10 million, which was unthinkable even 2-3 years ago. I think like at least two things happened. First, it was very founder and community oriented. Like the effort was founder and community driven. It was not government driven. It was not rich people driven. It was the founders in the community who were like holding themselves from their bootstraps and saying, we're gonna do it no matter what. And I think the second one is that there were like some credentialing moments that happened that if you wanna like try to copy the recipe, it worked for us. So when 500 startups started investing in the region, some other investors were like, oh, if these guys who are in Silicon Valley are investing, we want to invest too. And that was the first wave. But it was only like small. But then a few years ago, some startups started getting into Y Combinator, which, I mean, no matter how much I love 500, is way more prestigious than 500. It's the most prestigious program in the world. So companies getting into Y Combinator made investors be excited about what was happening. And investors, I don't want to say that they are just followers or like there's a herd mentality around investing. But as human beings, it's true that we're looking to validate that others are doing what like we're about to do, especially if there's risk involved in what we're about to do. So one way that you can reduce that risk is if you start like participating in those communities. If more Ukrainian startups start getting funded by Y Combinator, you will start seeing how other investors are like, oh, if that company is good enough for YC, it's good enough for me. And it takes time, but at some point, all of a sudden, there's nobody wanting to invest until everybody wants to invest. And you will see that moment eventually. It like change happens gradually and then suddenly.
I would like to add another dimension to this because this is something that has been striking me. When you look at the history of Silicon Valley, you see a bunch of very successful entrepreneurs, let's call them the PayPal mafia. They become rich and then they start to reinvest or start new company. And we have Elon Musk doing Tesla, we have Peter Thiel doing Palantir and a few other things. You have et cetera, et cetera. You have the beginning of LinkedIn, blah, blah, blah. Now you look at Estonia, for example, and you have Skype and you have the Skype funders reinvesting in Estonia and in a way giving back, but not just giving back also their knowledge, their experience. You mentioned Grammarly, Preply, GitLab were amazing, but can we even call them Ukrainian company? I'm not even sure. But who are the great people who are going to give back? And I know, I don't know if in the room, but I saw a few people, including our dear friend Yaroslav from PetCube, who decided to move back from San Francisco after doing YC, and PetCube is amazing. And I know he's giving back, and we start to have those. But do you see that as a key component to ignite the ecosystem? Victoria?
You know, I'm very practical, and besides, I think in the email you said that I can spice up the conversation, and that's what I'm about to do.
Please.
Okay, so I'm practical, so I have created a list connected with the top founders and their background from Central and Eastern Europe, and there are some top founders, 4 from here, so what am I doing? I'm reaching out and saying hi. Something as easy as that. And generally, I really think Ukrainian people are ambitious enough to talk through, to come for the conferences, to ask for the advice. And you don't really need to come back and become a star, but what you guys need to do is to be able to actually write a cold email. And sometimes it is as basic as that, and that's about it. Talking about the YC, I do agree, and currently we are having, the last 2 Polish companies from the last YC batch, which we have had from Poland, we have invested to them on the pre-seed stage, so the only 2. And talking about the community, they are giving the speeches, they are giving the advices. We are giving, also a lot of positive content and trying to inspire people to do more. But we've been asked, why would I want to come and do something for somebody if I'm not being asked to do so? We're having a lot of job to do. We're doing the investments. It is not our core business, to come back and talk about that. But for the founders themselves, they're reaching out. We are helping them to connect and becoming the connectors, not the main source of the information, because we are not just on top of that.
Pavel, do you want to add?
I think there has not been enough distributed wealth created yet in Ukraine to make a dent. There's a challenge. There have not been a lot of huge exits of Ukrainian tech startups, so not a lot of wealth in general. And second, usually the distribution of wealth is less broad in the startups from the region that they are in the US. So in the US, at an IPO of a large company, you can have hundreds of millionaires, some tens of people with tens of millions plus, who will then go and invest actively and be active in the ecosystem as angels. This is different. Here, people do not trust that they will get rich from options. Many people, because didn't. So a lot of people prefer to take a higher salary. And as a result, when something is successful, there is not that broad of wealth creation. But I think it will come. I'm very optimistic on that.
Ken?
Well, I mean, it's also kind of sense of belonging. Like if you're the foundation of the company started in the home country, and if you've been around for longer, tested the idea, reached a considerable size in the home market, then you have more sense of belonging, and you keep some components of the company, of the startup, in the home country as well. That's pretty much like the Israeli model. But as far as I've seen, the early examples of Turkish startups who went to US, Ukrainian startups like Grammarly who went to US, they really went straight ahead because the ecosystems at those times weren't that developed. I think one of the changing factors might be that I might have longer period of maturing in their home markets, or at least keeping like the kitchen, the tech development at home, and then they will create more value for the local ecosystem as well.
Yes, please, Cesar.
I think we all agree. Like, eventually, if there are like good equity pools, and eventually the companies are successful, there will be much more distribution of the wealth. It will take time. One thing I'm just thinking is that, at least from my side of the world, we are always hearing about Ukraine. But we hear about...
That's also good news.
Yeah.
That's cool.
But I don't know if it's positive or not, because what we hear is U.S. companies sending their development to Ukraine. Like that's what they say, right? Like, we sent the development to Ukraine. We're using some Ukrainians for this. And you have to be very careful with this because, and I mean, we're going to be controversial. Like, if that's the positioning, then that means that you're not getting any of the wealth creation from all of the effort that those that those engineers are putting into this.
Absolutely.
So I think one thing that you can do before anything else is making sure that any engineer in Ukraine working with a US startup is getting visibility by name on what they're doing, and they're fighting to get equity into those startups.
Okay.
Can I add just a point on top of that? I think this outsourcing culture or outsourcing tradition is a good thing for a country, really. Like, the most valuable unicorn came out of the Central and Eastern Europe is UiPath, and they're a Romanian company, and they started as an outsourcing company, actually. They got the kind of automation requests from big tech companies in the US. They outsourced, they did the development, and they found that there is a common intersection of requests. So instead of developing each time from scratch for each client, why we're not turning these features into a product? And now it's a hugely, massively valuable company. And it also enables the workers, the programmers in those outsourcing companies to come across a lot of problems that needs to be solved. It gives them like a really grasp in terms of what the world and top tech companies in the US, for instance, what they need to be solved, what they're working on. And I think it's a huge asset for Ukraine to have this outsourcing capability.
Victoria.
Oh, yes. First of all, we've used the term like we are using Ukrainians, which I'm strictly against. Second of all, we are talking about the software houses, which are called galeras in Lviv. Like, literally, people are saying, "Мы вигрібаємо," meaning that they're being paid not enough for the job which they're doing, or practically we're using the intelligence of the Central and Eastern Europe. So yes, I am against that. I think in our fund, we are giving the tickets equivalent to the US standards, as well as we are making founders fundraise by the US standards, because we believe the old market is open and we are helping on that. So, yeah.
But okay, but let's continue a little bit on this, because I think it's a very important point, and it's something I've seen over and over here. Outsourcing is obviously huge. It's a huge market, and not only for the US. There's more than 20,000 developers in Ukraine that are working for Israeli companies. So basically, the value is going, right? I mean, totally agree with that. So, but how do we switch from that to pushing funders to create product companies? Because it has the same culture. It's not the same thing.
Well, in our fund currently, and in case you guys are looking for such opportunities, we are looking for the startup which is going to outbreak this market, especially the software development. So no code, low code, the new trends, we truly hope that this is going to be changed. And we are trying to inspire the founders. We are trying to bring the capital over here to make it more available. So that's our answer.
Cool. We appreciate that. Excellent. Okay, we are moving almost to the end of this panel. It was super interesting, but now I want to switch a little bit the conversation. And okay, I'm going to tell you, I'm a little bit tired of the speech that is kind of global. What do we look in a funder? Oh, we look at an amazing people. We want amazing team, especially at seed. We know the product will come, and da da da. Okay. Can you tell us something different? Or is it the same everywhere in the world? Every VC in the world is looking at, we look at people, we look at the team, we look at, but, okay, but what's the secret sauce?
In terms of the team?
Yes, or in terms of what you're looking at when you look at the company.
It also kind of depends on the category of the company as well. Like I see startups like startups that are solving a problem or creating applications or games or entertainment for people's free time. I think these are two primary categories. And if it's second one, and there's of course an intersection, like Netflix is solving a problem, but also stealing PlayStation's time in people's free time. For the second one, building fun applications like games, I personally look at passion in the person, that he or she is supposed to be coding games from at a very early age, not like at 24 decide to want into the gaming kind of thing. And if the startup is more traditional problem solver startup, then what I look primarily is whether that person is a good observer, like whether he or she has some kind of an empathy, so he or she can relate with the customer and make the customer's problem his or her own problem, and look to see the world through from their shoes, in a sense. And I mean, this part is kind of what I'm really interested in. And the key question is to get that insight that I ask is, which real life experience made you come up with this idea? That's my kind of tricky question. If they say that, oh, I was just dreaming about something, and then yeah, question marks begin to arise. But if they give you a really articulate observation, that I observed this, and then kind of some social testing on top of that, and some useful and surprising insights from the customer's perspective, I think that's a very strong startup founder. That will be my impression.
Let me be more specific. To me, if you start a startup, if you come to me, I'm going to say, you're crazy. Do you understand you're crazy? Are you ready for that craziness? You're going to fail, most probably. You're going to embarrass your family. You're going to, I mean, and if you want to make money, that is certainly not the good thing that you should do. Yeah. So, and actually it's not me, it's the founder of SoftBank who explained why did he invest super early on in Alibaba, which was a genius investment at the time. I'm not saying he did just good investment. WeWork was a very questionable one, obviously, but and he said, it's because I saw in Jack Ma's eyes the sparkle that makes me understand that he was as crazy as me. But that's not rational at the end of the day.
Yeah,
How do you document that?
But it's about passion or ambition. Like,
okay, passion and ambition.
I mean,
I like that.
Some people have both. Some people have either that or this. But that's why I actually made the categorization. Like, if it's like, I mean, they have to be either passionate or ambitious or both.
Can.
I want to say that you cannot explain it. And it is what you have said. It is the team and the market, etc. And there's nothing new. And you will spend decades understanding what that means, and your idea will change. It's like a monk contemplating a butterfly, and after 5 years he'll say, "Now I see," and after another 50 years he'll say, "Oh, now I see what there was," and what it means. It's tricky because we work, we hire people, we hire analysts, associates, we train them. It's not immediately obvious what you're looking at. It takes people a while. And then they learn basically what the firm is looking at. And another firm may look at something different. But they say exactly the same things. If there was an easy algorithm, we will all be out of business. So clearly it's not an easy algorithm.
I absolutely agree. And, I think for me personally, it is easier to describe the founder which I wish I would have than the ones which we are actually right now having in the portfolio, because they're all different, all brilliant in their own way, but definitely they're all ambitious or passionate. So yeah, we actually had a very nice conversation with Paul Bragel about that. And he also describes them as the main factor is ambition and dedication. As long as those two components are over there, the rest is about the pitch, product, and hopefully you're opening the new industry which is not over there. But like those are, small things which we wish you will have, but never cut yourself for the VC. Just come as you are. You're amazing.
Cesar, but I will challenge you guys again. Cesar, first.
Oh, I go? I think you're right so everybody says that it is a team, but the problem is that most investors, not people here, but other investors, will not follow their own advice. So a lot of investors will come into say, oh yeah, it's all about the team, but then when they're actually looking at companies, they're taking all this time to review the business model and then the economics and then the market and it's like it's not really all about the team. But the best investors in the world are able to make a decision in less than 10 minutes. And I think we've all met that founder that they're 5 minutes into talking to you and you're like, shut up and take my money. You already know that they're going to get that investment and that you're going to have to fight for your allocation. I have a friend who says that venture capital is 99% saying no and 1% begging. And it is so true. Once you meet the best investor, in 5 minutes, you're like, I'll have to beg. Everybody will want to invest in this person.
I had a conversation with Mark Andreessen one day, and he was talking about ideas. And he said, well, look, when the guys from Airbnb pitched me the first time, said, look, guys, I love you. You're really cool. But this is a really terribly bad idea. So I'm going to pass. Well, at the end, Andreessen Horowitz invested in Airbnb, and he still regret that because he had to come in a very late stage, and and then so I asked him, what did you learn from that? He said, well, if it looks like a bad idea, then I should look again because there might be something here. And if it looks like a good idea, then usually now I pass. So it's not just about the people, it's also about the project, the idea. I mean, is it something you think about? And I'm sure you do.
I
Of
mean,
course you do.
Yeah, it's like for instance, the story of Facebook when they started.
Right.
When Mark Zuckerberg was trying to raise money, most VCs and angels told him that, hey, social gaming, social site game has finished because now we have a lot of local startups like Contacti or Orkut in Brazil or all that stuff, or MySpace or Bebo and all that stuff. But he had this very strong insight that, all the other social platforms' assumption was, why on earth will people want to be in touch with people that they already know in real life? They will want to use us to meet with new people around the same areas of interest. And hence MySpace, for instance, was very much centered around music, which is a lifestyle category. So if you're listening to the same music, you can meet with interesting people. But he had the opposite insight. And he probably did it because he did this social experiment in a very confined place in Harvard University campus. And he found out that people were engaging with each other more if they know themselves in real life. So that's the strong insight, and it doesn't really come from thinking alone. That strong insight comes from either doing social experiments or reading data very well, or some kind of a gift in intuition, I would say.
Victoria.
You know what? I'm actually going, down to earth and talk about my personal experience.
Please.
So I've been hired as an associate to the venture capital, and it was like a huge dream of mine. So I came up with a strategy as a marketing strategist. I know how to analyze traffic, how to do the basic scrappers, automate emails, like everything. Anyway, so I've decided to see what industries are growing, and that I will receive the emails with, like my small things which would show me what industries are about to hit. A lot of work, half of a year, and I ended up with my, brilliant thing. Anyway, then I've met guys from Belarus. And the cool thing about the guys from Belarus, normally that they have to leave their own country in order to build it, they have nothing to lose and a world to see. Like literally no barriers. And I would listen to their pitches, and then I would come to my model, look over, it's like, this does not exist. Is it or it's not? So my previous fund, B-Value, we were mostly investing based on the traffic, based on the generation, based on already known trends or the trends which were upraising. However, people from Belarus taught me that this is not the way. And that actually you have to look at the spaces where the traffic does not exist to be successful at the seed investments. So yeah, I absolutely support you guys on the fact that we have to develop new industries, crazy ideas, or the ones which seem to be absolutely unrealistic.
Ken?
Okay.
Or Pavel, maybe. Pavel, do you want? Yeah.
Well, I think there's several, again, topics. We're trying to define undefinable. When we talk about, the idea, I think, is bad, then I think the idea is good. It's very personal to everybody, to somebody's mind. As somebody who operates in a partnership environment, I can tell you somebody in the partnership thinks it's a great idea, somebody thinks it will never fly, it's a stupid idea. It's very normal. So it's really, there's no such thing like, okay, there's some ideas are universally bad. That exists. Also, if everybody thinks it's a great idea, it's probably not a great idea. But normally, the way you should invest, what you invest, is that some people think it's a horrible idea, some people think it might work. And in a competitive market, that's where you can be. If everybody thinks it's a great idea, it will be funded immediately. There is no space for value creation because there is a lot of supply. Everybody believes it's already priced at the end level, right? So that's the fact. What was the other topic? I forgot.
No, that's good.
Okay.
We're out of time. Cesar, and that's going to be our last word.
That will be
it.
I just want to tell you a quick story. We meet this founder a few years ago, and he pitches us a delivery service for hookah coil, like the carbon of the. And he's like,
that's very niche.
it's super niche. It's like, have you ever been with your hookah and you run out of tobacco and coil? Like, you need our startup. And we're like, and we will deliver in less than 99 minutes anywhere in the like this huge city. Like, okay. So next day, my partners put in they wanted it delivered, and it was a massive storm. And the thing comes in 30 minutes, and the guy is riding the motorcycle that is delivering the thing. And we saw that a spark in his eyes of the founder who's willing to do anything to make it work. So our reaction was, would you be able to deliver other things other than this super niche hookah thing? He was like, well, sure, I can deliver pretty much anything. And we invested. And now the guy he's about to hit $1 billion valuation with his company a few years later. So sometimes the idea is really stupid. It's the founder who has to be very special.
Guys, thank you for a very optimistic panel. I think we all learned a lot. I hope those of you who had ideas want to pitch. Those of you who have idea and we didn't want to pitch now want to pitch. And all of you who are in outsourcing are going to switch to product company. Thank you very much and enjoy the rest of your afternoon.